I see foreign activity on the bourse yesterday pretty much evenly matched when it comes to sales and purchases of Kenyan stocks. But overall, what type of activity and participation are you seeing from foreign investors on the Kenyan bourse?
Well, we have two types. We have the new investors, some of whom are looking at the dollar weakness as an opportunity to look at the Kenyan market because Kenyan assets are suddenly looking quite cheap in dollar terms, as well as in absolute terms, price multiples, price to book. Some of the counters are looking quite attractive. So there are those sets of investors. Then we have those who've been sort of long-term investors. Some of them are pulling back a little bit. Others are also realigning their portfolios, to sort of position themselves with the new realities.
So really stock picking when it comes to foreign investor activity, looking at the long-term growth story.
Yeah, certainly. We're seeing some companies benefiting quite a bit. BAT Tobacco was one of the main beneficiaries over the last almost 1 week, but it started to pull off with a bit of profit taking. But yes, quite a bit of stock picking.
Now, whilst we saw Kenol Kobil fall back yesterday, it has been really an outlier on the bourse for 2011, really outperforming the market over 10% into positive territory for the year. Now, we saw that 86% jump in pre-tax profit for the first half of the year. Going into the second half of the year, are they able to maintain this type of momentum in growth and earnings?
Yes, certainly. If you look at it half on half, second half might be a little bit weaker, but overall for the year, they're going to do over 80% growth. And we've seen, a lot of the growth coming from the diversity of its product lines. I mean, products like fuel oil, aviation came in quite strongly. And on overall, we are seeing each of the product lines coming in at around 20% of profit before tax. So quite a good diversification on that. And also on the trading part of the group is also quite good and actually provides a lot of advantage in terms of moving products and affordability, in terms of lowering the overall product cost for the group. So that gives it a very big advantage compared to players who are either localized or having very, very few product lines.
Now, the company has hedged around 50% of its foreign exchange book when it comes to dollar liabilities. Going forward, though, how is the weak shilling going to affect earnings, do you think? Is it going to have a significant impact?
I think they're still going to take a hit on the exchange losses. I think hedging, they do hedge, but I don't think they hedge it out completely. And in any case, they don't really, they deal with the physical product. And so hedging, it's very difficult for them to hedge because they can only do that either by borrowing in dollars and so forth. But on overall, I think they are going to be impacted for this year. But net, on the earnings front, they're still going to maintain a good bottom line.
Still foreseeing 80% growth there. When it comes to the counter price, Kenol Capital has a buy rating on the stock of 1750, is saying that that's a target price that they're seeing for the company. Currently trading under 10 shillings at this point. What type of upside potential do you see for Kenol going forward?
There's certainly upside, and I think, even if you look at it from a transaction point of view, if you look at it's very well diversified, of over 8 subsidiaries in the region and dealing in almost 15 countries across sub-Saharan Africa. And if you look at the transactions we've seen, if you look at Puma Energy buying up assets across Southern Africa, the exit of other oil multinationals and the price that they've fetched, if you just look at the value of those assets, then Kenol Kobil is trading at substantial discount. So
do you buy into the target price of around 1750?
Yes, I think it'll probably trend upwards towards maybe 15. I think that's the level I'll be looking at it.
Okay. The shilling, of course, has been top of investors and traders' minds, really. The Central Bank of Kenya now saying it's going to be trading directly foreign exchange, that is, with importers and exporters. We've seen the shilling appreciate on the back of that at around 101 this morning. Do you think it can sustain this upward trajectory?
I don't think we're going to see a very substantial appreciation. So the current level, I think, if we see a level of around 100, I think we'll generally be quite comfortable with that level. If you're looking outwards over the next coming months, obviously you're going to see the imports starting to reduce. The central bank has reasonably good reserves, but it's opted not to use those. Which I think is probably the right decision. I think, we probably also have to balance with job creation in the domestic market. And so it's just a matter of avoiding too much volatility. But at the current exchange rate, I think companies will have to realign their positions and try to look at the raw materials, trying to source more domestically. Companies which can substitute imports, I think that would be quite positive. But at the moment, I think, this is a situation probably going to see sustained around these levels.
Let's move on to the bond market, because Kenya's government coming out, obviously the Kenyan government issuing the 12-year infrastructure bond that went on sale yesterday, looking to raise around 20 billion shillings from Kenya's diaspora. What type of demand did we see coming through?
The subscription came in at around 67%. But the government accepted about 58%. So essentially about 58% of the 20 billion, that's what sort of they decided to take in. And the yields came in at around 16.7%, which is quite high. If you consider the 12-year bond is not actually a 12-year, because it's the principal is actually staggered in terms of repayment. And then also there's no tax on the infrastructure bond in terms of the interest. So, it's actually a very steep cost that the government is borrowing at the moment.
With yields at such high levels at this point in time, is this going to dampen the appetite from corporates to issue fixed income instruments?
Yeah, certainly. I don't think these high interest rates are going to be sustained for very long. I think we are probably peaking. So it's just a matter of time. I mean, inflation is a big concern, and that's what people have been concerned about. But if you look at it in absolute terms, if you're looking at maybe Kenya, Uganda, and you look at the absolute cost of living, many of the other countries outside of Kenya are actually more expensive, and it's just that we are coming from a low base. So I think inflation is going to be a concern, but I don't see it lasting for very long, and that's why even we saw with the monetary policy raising the central bank rate, but not raising it very significantly, because at the current rates, I don't see it even fighting inflation. I think the exchange rate would even, the exchange rate might have a bigger impact, but now, I mean, I think the current levels are probably sustainable. We're probably going to see interest rates easing going forward.
Interest rates easing, but how's the corporate bond issuance been to date in 2011? What type of issuance have we seen?
Well, almost none. I think Shelter Africa came in. I don't see many corporates borrowing at these high interest rates. They'd rather even offer equity to their shareholders. The level of interest rates is just way too high on the part of corporates, and from a return perspective, it would offer such a high benchmark for corporates. It would actually be destroying value.
So really going forward, you'll have to wait for those interest rates to come down before we see corporates really coming to the market to raise that debt, or issue that debt rather. Thanks very much for your time today. Yeah. Eric Musau is a research analyst at Standard Investment Bank from our Nairobi studios there.